delighted today to be speaking to Johan van Zyl, who is the chairman of South Africa and partner at Stonehage Fleming. Welcome, Johan.
Thanks for having me, David.
So wonderful to see you here at the Mount Nelson Hotel, a glorious sunny day in Cape Town. Looking forward to a conversation with you about the latest trends from the family office sector particularly. But first of all, it'd be interesting to hear a little bit more about your background and role at Stonehage.
Thanks, David. So oddly, when I meet people, they don't realize that I actually was an engineer, or I trained as an engineer. But I've been in the financial services and wealth management sector for 21 years, having joined as a young analyst at Fleming Family and Partners, just before the bank was sold to JP Morgan Chase. And I was in London for 10 years, and before returning back with my young family. My daughter at the time was 2 years old. And then I started my career with Stonehage. And a few years later, Stonehage and Fleming Family and Partners merged to form Stonehage Fleming. So I always tell my colleagues it's a good idea to keep good relationships whenever you leave a firm and not to burn any bridges.
Absolutely. It's a small world, isn't it?
It is, absolutely.
So it's exciting times at Stonehage at the moment. You acquired the Maitland business and have bedded that business in now, but perhaps you could just sketch out the group as you see it, the different offices and some of the people within the business, and what's the vision going forward?
Yes, so we bought Maitland in February. The transaction completed back then, and it's been a year of integration. We're coming up to a year in a couple of months' time. And we've also recently announced that we are acquiring an asset management business in Stellenbosch called Rootstock. That's just subject to regulatory approval and will hopefully complete early next year as well. So there's been very much a growth strategy, both acquisitive and organic. And I think really what it is to create sufficient scale to be able to provide our clients with the strength and depth in service offering. We all know that over the last few years, there's been a huge regulatory burden imposed on the industry. And so while one wants enough scale to be able to service your clients effectively and efficiently, you also don't want to get too big that you lose the human touch and the personal touch, which is something we focus a lot on. Absolutely,
and you're very much positioned for the family office for the ultra high net worth complex international family. I mean, Correct. What is it that you see as the sort of the real, I guess, headlines and trends from that sector? Is there any sort of observations that you have on what these global families really want and need at the moment?
Well, from a South African perspective, I can comment on that. And what we still see is very much a trend to globalize your asset base, to diversify internationally. Obviously, we sit in an environment where there are political concerns. We just saw that last week with rumors around President Ramaphosa resigning. Fortunately, he hasn't at this point in time, but the rand moved significantly just with that rumor going about. So there's a risk element to this. Diversifying your asset base internationally is a big trend. And then the other interesting thing we see, particularly from a local perspective, but actually I think it's a global phenomenon as well, is that family offices are increasingly interested in private equity or private capital. In a South African context, they tend to do that themselves. So they create these family offices that have an execution capability. They
leverage their own networks, do they, for deal flow?
Correct. Yeah. And they're always interested in deal flow, and they're interested in co-investing with other families as well. So that's something we've definitely picked up more recently.
And does your international office footprint, you think, add to that story? Because like a well-networked South African family, obviously they're global, but you know their network can only go so far, whereas actually a network of offices and a professionalised way of putting that across the client base. And I guess with the due diligence you can add as well, you're really giving them extra capability.
I think that we're definitely finding that. However, in a South African context, they're on the ground here. They've got very strong networks. So often they're looking to do those deals themselves. But as they expand their capital base internationally and their networks, that's definitely an area that we can add value to them.
Really interesting. I mean, just looking at some of those foreign markets that are most common for South African families to have connections into, obviously starting with the UK where you are based. I mean, what's your assessment of, UK and SA trade and relations, for investment with business families. I mean, I'm hopeful that we'll have more business and trade between UK and SA, particularly with a post-Brexit environment. I think there's a willingness to do business. But how do you see, or how do your South African entrepreneurial clients see the UK from here as an opportunity?
So there's always been a strong nexus with the UK. There's the language which helps. There's the time zone. So there are strong trade relationships, no question about that. I recently attended a lunch with the ambassador as well, and he's very pro that relationship. And we saw President Ramaphosa on a state visit a couple of weeks ago. So I think it is something that we see. We obviously have a presence in both countries, and we see a lot of our next generation clients, children of existing clients, studying abroad. The UK is often a focal point for that. However, they haven't made it easy.
No.
The UK investor visa is no longer an option, so it is harder to relocate to the UK as an example.
Education is a strong draw, isn't it? And obviously UK real estate, residential real estate in London has been a popular angle, but it'll be interesting to see whether that underlying commercial trade and business can be something that provides a further engine, isn't it, as we go forward?
Yes, I agree. I think we'll see. Time will tell.
Yeah. And then just looking at the US, I mean, obviously that's another major market where high net worth families have children moving overseas to study, to set up businesses. I mean, what do you see out of the US market? I
think that's what we've seen. We've seen a trend where children of clients go and study abroad and then they settle there. They end up getting jobs there. They end up meeting their spouses there, and then their lives start in the US. Unfortunately, that also introduces many complexities from a tax perspective. If there are existing trust structures in place, for example. And we've got a small office in Philadelphia, and they're very much focused on that cross-border tax advice and the issues that come with that. And in fact, if you look at our footprint of where our offices are, the 15 offices we have, we've really followed our clients to be able to provide them with the right level of advice.
Well, the US is a classic example of why you need strength and depth, isn't it? And beneficiaries are likely to end up becoming resident, picking up some kind of US tax exposure. So then it's just about managing that within the business, isn't it, and heading off those risks.
Yeah,
so no,
absolutely. And we always implore our clients to please come and talk to us before they actually make the move, because then you can do proper planning.
And you've also got a strong office base in Switzerland, some great people on the ground. I mean, what do you see for the rest of Europe as well? I mean, Switzerland's a great hub for management of professional relationships across European countries. But what do you see any particular trends there for clients wanting to relocate or invest?
Yeah, so we've got 3 offices in Switzerland. We've got Geneva and Zurich, and in the center, Neuchâtel, which is really the operational hub in Switzerland. And it's always seen as a haven of stability. So I think there'll always be a place for Switzerland in the ultra high net worth individual space, and can be used as a platform then to invest into other markets. So we see that as a draw card, but the same can be said of the Channel Islands. So we've got offices in Isle of Man, Guernsey, and Jersey as well, and they do attract clients that are looking for those safer havens. We've seen worries out of China recently, for example, with the uncertainty there in terms of how tech companies will be regulated, as an example. And again, clients that are coming from less developed or less certain political environments do see those centres, those financial centres, as safe havens.
Because they're well regulated, they're known, and particularly in a trust environment, the trust and fiduciary structure, you've got to believe those administering that wealth are going to adhere to certain standards, don't you? You know, it is about trust.
Absolutely. And there's a long history of jurisprudence and stability and how things have been done, particularly when it gets to nasty situations where there's litigation. There's strong legal precedent in these jurisdictions.
And just coming to the sort of toolkit that South African families use for structuring wealth, I mean, there's a lot of options. I mean, the trust is a very popular one, but also you've got life assurance wrappers, pensions, fund structures, corporate structures. I mean, what is it that you see most? I mean, families obviously use these in concert, but what would you say the key things, the key trends are from that toolbox for dealing with South African families?
So it's actually interesting because if you go back 20 odd years ago, there was no capital gains tax in South Africa, and you couldn't get your capital out the country. There were very stringent exchange controls. So life was much simpler then, and typically you would have a trust structure, local trust structure, and all the assets would sit in that. You could also lend the money into the trust structure interest-free to set up those structures. That's all changed. So the landscape is very different now. And clients are looking at how do they diversify their wealth from that single structure internationally. So we see the use of trust structures in places like Jersey or Guernsey or Isle of Man is very popular. Switzerland too. And secondly, you would see vehicles like insurance wrappers being quite popular. But it depends again on the size of the client and the asset base. Typically in the ultra high net worth space, they do go for the trust structures by and large.
Absolutely. And I mean, just looking at the family office space and governance within the family office, you know, why does having good governance matter in those entities?
Well, I think the big thing, and we'll see this play out over the next 10 to 20 years, and by the way, I think this is one of our big opportunities as advisors to really add value to our clients, is what's known as the great wealth transfer. So from one generation to the next, and we've had enormous wealth creation over the last 20 years. But those entrepreneurs are now reaching retirement and the end of their lives. So this wealth is gonna pass on to the next generation. And so suddenly you move from an autocratic decision-making environment where the wealth creator calls the shots to suddenly having to be more democratic in the outlook. So as soon as you get into that scenario, being transparent about what's there, how decisions are made, is critical in order to preserve the wealth across generations.
Do you see these values being codified in like family charters to give, you know, across the generations more of a steer on formalizing decision making, but also in ethos?
We do, and we see it very much to try and establish the principles around how decisions are made around the wealth. But more importantly, probably is what is the purpose of that wealth? So what can it and can't it be used for? And that really sets the tone for all the decisions that follows. You know, it's the value system that the wealth creator wants to apply within the family, and how they interact with that wealth.
Because I guess it's also about establishing the narrative of the family. You know, it's about telling future generations this was how the wealth was made, and I suppose some of the learnings as well from that. You know, there's always been difficult times in every generation, and it's, I suppose, harnessing some of that, isn't it?
Yes, and I think the interesting part about that, we often encourage clients to write history, you know, family history, but also how that wealth was created. And what you find is the further generations are removed from the source of that original wealth creation, the less respect they have for the wealth. It just becomes a commodity, and that therein lies the risk. If you don't treat the wealth with the respect, i.e., it was hard to earn that. It was a lot of blood, sweat, and tears that went into building that fortune. If you don't document that somewhere, next generations lose touch with that, and then it just becomes something that they can use without really thinking about it.
And I mean, what are some of the challenges of enhancing governance in a family office setting? I mean, perhaps the almost like the accountant, the CFO of the family sits within the family business. They've been those working effectively the informal family office, but there comes a point where that needs to be professionalized, where third parties need to be part of that governance, you know, journey. So how would you characterize some of the challenges that the business families will face?
Yeah, so I think one of the biggest challenges often lies with the founder of the wealth, because they're used to making decisions without having to include other family members. So really getting over that hurdle and moving, as I said, from that autocratic decision-making environment to one where you're opening it up to views from others. And again, everyone's different.
Are you sometimes mediator then in that position?
You're sometimes mediator, and you also, gently encouraging bringing the children in at an earlier stage and starting that education process as early as possible around how the wealth is structured, how the wealth is managed, bringing them into the meetings with advisors, and trying to encourage that openness. And it's actually an amazing process to be part of, because where there might have been a lot of fear and paranoia around it initially, that actually you just see that melt away with each meeting, and it becomes less threatening. And then the children really add a lot of value, because they ask inquisitive questions that make the founder think and make the advisors think too, in terms of how to do things, which often can be different and will be different in the future compared to how it was done.
I mean, are there notable differences between those coming through in the next gen who are part of this sort of the beneficiaries, if you like, of the great wealth transfer, in particularly from South Africa, how they view the world, and are they different from their parents' generation, or are they really facing the same challenges and doing it in a different way? I mean, what do you see? Can you characterize such a diverse group of people into something with meaningful trends?
I suppose there'll always be a risk of generalizing, but yes, there is a difference. They're challenging more. They're asking more difficult questions. They're pushing for greater transparency. They want to be involved in the decision making. They feel a burden of responsibility, but they also challenge in good ways. They're challenging I'll just start that again. They're challenging the internationalization of assets, and they are, I suppose, opening their parents' minds to greater possibilities. And
so they're seeing opportunities at home, is what you mean? It's not always instinctively going abroad. Actually, they're seeing through networks opportunities to reinvest in this country.
Well, there's a bit of that too, but I think also their studies will dictate a lot of their viewpoint too. So we are seeing a trend with South African families that the children are studying abroad. So naturally they start forming business relationships with their peers. So in fact, they will look to pursue opportunities abroad often.
Right, yeah, I see.
And be willing to move, potentially.
Yeah. No, very interesting. And I mean, what do you think are some of the key concerns for those in terms of investing money in today's environment? I mean, it's a very difficult picture. There's a lot of volatility and uncertainty out there in the world. I mean, how do you, through the investment advice that is available within the firm, help provide comfort to clients?
Well, it's been very difficult the last 12 months. I think this year has been one of the most challenging, certainly since I joined the group. And we've just had a whole bunch of factors that you might see one or two in a particular year or in a crisis. And so there's 6 or 7 different factors that were thrown at investors this year. But I think what it reinforces is that long-term views. So our clients that have been in the markets for a while, they're much more understanding. They've been through the good times, and they understand that these are exactly the periods where you've got to really look through the noise and not do too much, and certainly not make any rash decisions. So that's certainly something that reinforces you when you go through every crisis. There's this fear of things just getting worse, and they often do get worse before they get better. But to time the markets is always the mistake. So it's trying to really advise and coach clients through the bad times to say, look, unless you really need to liquidate the portfolios, is to try and look through what's it going to look like over the next 3 to 5 years, and really just reinforce that. Keep calm.
And also, I guess diversification is key, isn't it? It reinforces the point that if you've actually accumulated a lot of wealth in single currency, then you're vulnerable in a way that if you're investing abroad, you're managing your risk a little better.
Yeah, I think it absolutely reinforces the case for diversification. Unfortunately, it can be quite painful as well. So if the clients were not able to diversify quickly enough, and then are forced to, it might be at lower prices. But again, one wants to have a clear plan in place and try and do that as markets recover, as opposed to doing all of that at the bottom.
And do you see ESG and impact investment strategies being more part of a conversation with clients? I mean, in Europe, there's a very advanced conversation with advisors now that's on the table more often. But what do you see here locally as the trend?
Yeah, so we're definitely seeing that trend out of our European offices. In fact, we launched a ESG-focused fund a couple of years ago, and that's gaining some interest and traction. And we're seeing an interest with South African families and a curiosity around it. We've seen a few allocations towards ESG-specific funds or strategies, but I'd say at this stage it's dipping a toe in the water. It's not mainstream in a South African context yet, but it's more, let's try and understand the space. Let's dip a toe in the water, and it's a bit of a watching brief.
Okay, and what about on the philanthropy side? Is that something that you actively talk to clients about, find they're interested in? I mean, what is it that you see from here on the philanthropy piece, or is that something they're pursuing through their business and their interests in any case? Again,
no client's the same.
Yeah.
So I think there's a lot of charity that starts at home. There's often funding your domestic workers, children through schools, providing them with clothing and other support, and then it can become more formal. So it might be then supporting charities that are close to your heart in a passive way, and donating annually. And then there are some families that have more substantial wealth that want specific strategies around philanthropy, and they might set up their own foundations to administer that and follow a combination of allocating to existing established charities, but also funding projects themselves that meet the criteria of the foundation.
I guess it comes back to purpose, like you're saying, when you're doing a succession planning exercise, you need to identify values, and part of that story then can be the philanthropic piece, and that might be something that the family at that point in time wants to develop further, and I guess can be a way of bringing the children along too, into develop some philanthropic projects together that give that unity.
Yeah, I mean, spot on. It's a really great way to get the next generation involved at an early age. I mean, you can start when they're under 10 and just identify a cause that interests them, and it's a great way for grandchildren to interact with their grandparents and start getting introduced to the responsibility of wealth without having to disclose everything too early. So it's a very nice way of instilling those values. So we've seen that as a very useful succession planning tool.
Fantastic. And we're coming towards the end of 2022. We're looking into 2023. I mean, what's on the horizon for you in the business here in South Africa, and what do you think people should be aware of as we go into 2023?
So we're very much hoping for a better year in markets.
Yeah.
And we think that will start turning unless there's an unexpected event that we can't see right now, but towards the end of the first quarter. So we're hoping that 2023 will be a rosier picture for all, and I think that will allow families to continue on their plans, whether it was diversification. We find in these turbulent times, things just slow down a bit. People are a little bit more cautious about implementing their strategies. So hopefully it will raise all our spirits and hopes next year as better times return.
Well, Johan, terrific to talk to you today, and we look forward to sharing this interview.
Super. Thank you, David.
The latest technical content delivered through global conversations with professionals for professionals.